Okay, let's check out gold prices. Gold near record highs once again today, not far short of $3,000. We are awaiting key inflation data in the US tomorrow. Let's get more from Robert Cohen, portfolio manager at Dynamic Funds, specializing in gold. It's great to see you.
Yeah, pleasure to be here.
Gold hasn't broken $3,000 US. A lot of commentators are saying it's a matter of time. Why has it not managed to get up there, do you think?
That's a good, I think 3,000 psychological. I think $2,900 is and change is close enough. I mean, we're within, a couple percent. Like it's a rounding error, but we're there.
What's the key driver for gold? Why has it gone up so much?
I think right now there's a lot of fear in the market. We also have had an extraordinary increase in the M2 money supply in Canada, in the US, and we've basically junked up our currencies. So as that goes along, gold has gone up. It's also correlated to a lot of things like the VIX, the real rates. So if you take the 10-year yield and subtract the inflation rate, when it starts going negative, that really means that there's not any tools left in the Fed's back pocket to fight inflation. But what I think is interesting this time around is people are used to, economics-wise, are used to inflation coming from a full employment economy,
a hot
economy.
Yeah.
This inflation we're going through is what I call a monetary reflation. This is from lousy monetary policy from the policymakers and printing money and all the handouts. And so this is monetary driven. So it's not the same. You can't fight it with higher interest rates. So that's why we saw interest rates go screaming up. And now they go, oh, now we've stalled the economy. Now we got to lower them quickly. This is the fastest raising of rate period and fastest probably lowering of rates we've been through because they're using the wrong medicine for the cold.
Are you talking about during COVID
That's
they
right.
just cranked up the printing presses?
That's exactly it. And if you actually look at CPI versus M2 money supply, there's a 16-month lag. So in other words, when the government prints money, prices don't go up at the store the next day because people digest that information that slowly. It takes about 16 months for inflation to follow through. So then inflation comes through. Gold's already moved up with M2 money supply. And then the media goes, well, yeah, gold's not really moving with inflation. It's already done its job. Gold does not wait for everything else to follow through and then move up. It's already proactive.
Sort of Milton Friedman, one of the famous economists, he was obsessed with the money supply, I seem to remember.
Yeah, well, you want to protect that. And when you get very loose with your policy, that's why we have loss of purchasing power. So the best way to protect it is with gold. And we actually recommend investors have at least 5% of their portfolio in gold or a gold fund or something like that. If you have a higher risk tolerance, you can go up to 15% without really affecting or enhancing yourself on, remember the old Markowitz efficient frontier in economics. You're not really increasing the volatility of your portfolio. You're actually enhancing your returns at a given level of risk.
There was just that big mining conference, gold conference in Florida, and Agnico Eagle apparently was fighting off. Oh, what are we looking at there? Sorry, I'm just going to. You referred to this, the efficient frontier. Yeah. What is that chart showing us? Sorry.
Let's see, I'm having trouble seeing it from here, but I think that is showing you in the white the enhanced returns you would get in a portportfolio by adding gold in.
Okay. Yeah. All right. And the theory here would be that it reduces your risk as well.
Yes, yeah, or to enhance your return at a given level of risk.
Okay, fine, yeah. Sorry, so Agnico Eagle say that they just were fighting off requests for meetings from generalist investors at that gathering in Florida?
I think they divided themselves into a few groups. So I think I read somewhere they took something like a total of 76 meetings in a period of 2.5 days. In that same 2.5 days, all I could fit into my schedule was 18 meetings.
Let's have a look at AEM stock because it's emerged as a favorite, hasn't it? Because
well, it's the largest gold company in the world now.
By market cap, you
By
mean?
market cap.
Whoa,
Did you
bigger
not
than
notice?
Newmont? I did not know
Yeah,
that.
so the whole pecking order has changed.
Wow, Newmont has lagged so much.
You have Agnico at the top. You have Newmont just behind them. Then you have Wheaton, Precious Metals, then Barrick.
Poor old Barrick. Why is Barrick so out of favor? Just worries about the African political risk?
Yeah, and I think they're moving more into copper and into countries like Pakistan, and it's not really the appetite for investors' risk tolerance. They don't want to assume that these cash flows are all going to be safe when they build that mine in Pakistan. And as well, I think they've struggled a bit with their operations, and they've had a very strange acquisition methodology where they don't want to pay premiums for anything. And that they're missing out on some of the best acquisitions out there with that.
That's interesting. Would you be a buyer of Barrick right now?
Absolutely not.
Okay, okay. Agnico, is that a holding for you?
Yes.
Okay.
Yeah.
I do think about that big mine that Barrick wants to build in Pakistan, in Balochistan.
Yeah.
It sounds like a salty part of the world.
Well, let's put it this way. If you wouldn't take your family there on vacation, then why would you invest there?
I don't think I'd be taking an Airbnb there.
Yeah.
You have, before I run out of time, you have a couple of names on your radar. Snowline Gold. What's the attraction there?
The attraction here is this is a world-class new discovery. It's up in the Yukon. They already have in their pit-constrained model 7.3 million ounces, which is world-class. The strip ratio is extraordinarily low. The starter pit, they can actually do 2.9 million ounces at a grade of 2.45 grams with zero strip ratio.
That's pretty
rich. In other words, whatever you're digging up, that goes to be processed. So the economics are fabulous.
And the strip is just getting rid of the junk rock on top.
Yeah, it's the sterile rock. And this usually there's a lot of mines have, for every unit that's being processed, 4 units of a sterile material that they're not processing, but they have to move it. They're going to have less than, over the mine life, less than 1 ton of sterile material per unit of ore.
And where is that mine again?
It will be in the far eastern edge of the Yukon.
Okay.
So it's a bit remote. So that's one knock on the stock is that, you have to put in infrastructure into a place that doesn't have a lot of infrastructure.
Always great hearing from you. Thanks.